Ladies and gentlemen, thank you for standing by. The conference will begin in 2 minutes' time. Again, thank you for standing by. The conference will begin in 2 minutes' time. Good afternoon, and thank you for attending today's Sofi Q4 2021 earnings conference call. My name is Sam, and I will be your moderator for today's call. All lines will be muted during the presentation portion of the call, with an opportunity for questions and answers at the end. If you would like to ask a question, please press star 1 on your telephone keypad. At this time, I would now like to turn the conference over to our host, Andrea Procmiac, VP of Investor Relations. Andrea, please proceed.
Thank you, operator, and thank you all for joining us today for SoFi's fourth quarter 2021 earnings call. Joining me today are Anthony Noto, SoFi's CEO, and Chris Lapointe, SoFi's CFO. They will share prepared remarks regarding the quarter's results and then take your questions at the end. Just after market close today, we issued a press release announcing SoFi's fourth quarter and full year 2021 financial results. Our discussion of our results today is complementary to the press release, which is available on the Investor Relations page of our website, investors.sofi.com. This conference call is being webcast live and will be available as a replay for 30 days, beginning about 1 hour after the conclusion of this call. There's also an accompanying investor presentation on our IR page. During the course of this conference call, we may make forward-looking statements based on current expectations, forecasts, and projections as of today's date. Any forward-looking statements that we make are subject to various risks and uncertainties, and there are important factors that could cause actual outcomes to differ materially from those included in the statements. We discuss these factors in our SEC filings, including our 2021 Form 10-K, which can soon be found on the IR page of our website and the SEC filings website, sec.gov/EDGAR. As a reminder, we are not required to update our forward-looking statements. In our presentation today, unless otherwise noted, we will be discussing adjusted financial measures, which are non-GAAP measures that we believe are meaningful when evaluating the company's performance. For detailed disclosures on these measures and the GAAP reconciliations, you should refer to the financial data contained within our press release, which is also posted to the IR page of our website. Today's discussion will focus on both the fourth quarter and full year 2021 results. As always, we encourage you to evaluate SoFi's performance on an annual basis, as quarterly results can be affected by unexpected events that are outside our control. Now I'll turn the call over to Anthony.
Thank you, Andrea, and good afternoon, everyone. Before beginning my prepared remarks, I wanted to take a moment to recognize the unacceptable tragedy that is currently taking place in Ukraine. It's been truly difficult to watch this series of events unfold over these past few weeks and escalate in recent days. No one should have to live in fear or under the threat of violence, which has now become a reality. Our hearts go out to everyone directly or indirectly affected by this tragic situation. Now on to our results. We had another strong quarter, hitting new highs across our key financial and operating metrics and finishing 2021 with record annual results. Today, we're in our best position ever to achieve our long-term strategic goal, to be the digital one-stop shop for the major financial decisions in our members' lives and all of the moments in between. Here are some of the highlights. Record fourth quarter adjusted net revenue of $280 million was up 54% year over year and increased sequentially from a very strong third quarter, despite the unexpected federal student loan moratorium extension at quarter end. All three of our business segments achieved higher year-over-year growth. We delivered record full-year revenue of just over $1 billion at the high end of our guidance, which we increased on our third quarter earnings call. We achieved our sixth consecutive quarter of positive adjusted EBITDA at $5 million and delivered on our goal of positive full-year EBITDA. We had an amazing quarter for member growth. We added 523,000 new members in the fourth quarter, a record in absolute number terms, and impressively up 39% versus the amount added in the third quarter. As a result, we ended 2021 with 3.5 million members, an increase of 1.6 million, up 87% year over year, and well above the 3 million member target set in January of 21. We also set another record with new product adds of 906,000 in the fourth quarter, up an incredible 51% versus the number of third quarter adds. We finished 2021 at 5.2 million total products, more than double the 2.5 million we had at year-end 2020. And at Galileo, we grew enabled accounts 67% year over year to 100 million. We were able to achieve these milestones in 2021 and get to such a position of strength today for three main reasons. First, we continue to drive strong growth through great execution across our three diverse businesses, which reflects our ability to capitalize on changing macro conditions. Second, the success of SoFi's unique financial services productivity loop strategy accelerated as we scaled our business in 21, which allowed us to exceed our original 2021 member growth target by 40% and, importantly, still hit our EBITDA target. And third, we took a giant step forward in 2021 in achieving our goal of becoming a household brand name via our SoFi Stadium affiliation, the success of our integrated multimedia campaigns, and the virality of the influencers we partnered with. I'll take these points one by one, starting with number one, how we drove strong growth through great execution across our three diverse businesses. In lending, we grew segment revenues by 30% year-over-year in the fourth quarter and 42% for the full year, even with the unexpected extension of the federal student loan payment moratorium in late December. Fourth quarter personal loan originations were a record of $1.7 billion, up 168% year-over-year, and more than double fourth quarter 2019's pre-pandemic total. Full-year originations were more than $5.3 billion versus $2.6 billion in 2020 and $3.7 billion in 2019. Personal loans outperformed as a result of our improved execution, enhancements to our technology and credit models, and the quality of our loans. And through our lending as a service partnership with Pagaya, we added nearly 7,700 referred loans across a broader audience while maintaining our credit criteria. In home loans, we met our 2021 goals to diversify into purchase loans from predominantly refinanced loans and to re-enter the jumbo loan market. By the fourth quarter, we had increased purchase home loans from low single digits to low double digits as a percentage of SoFi's total home loan volume. And we relaunched jumbo loans in the second half of the year. This diversification will help drive continued growth in a rising rate environment. In student loans, we saw accelerating demand in the fourth quarter ahead of the January federal student loan payment moratorium deadline and anticipated rate increases in $1.5 billion in loans, up more than 50% sequentially, even with the surprise late December extension to May 22, which caused a reduction in demand during the final week of the quarter. Looking ahead, we expect continued strong growth in lending, driven by our ongoing momentum in personal loans, the end of the student loan payment moratorium, better positioning in home loans, and the many opportunities our new bank license presents. In financial services, we achieved record growth in products adopted in the fourth quarter, and importantly, a large step up in monetization that drove record revenue up nearly 2x sequentially. We added 857,000 new financial services products in the fourth quarter, up 56% from the number of third quarter adds. For the year, we added nearly 2.5 million new financial services products, more than double the 1.2 million we added in 2020. Through better monetization, we produced a 5x year-over-year increase in our fourth quarter total financial services revenue of $22 million, as well as our full-year revenues of $58 million. Product improvements that drove the year's phenomenal growth include the following. In SoFi Invest, we gave members more selection and new features. We added 25 new cryptocurrencies, making SoFi a selection leader with 30 at year-end. We offered 2 regular way IPOs to retail investors in the fourth quarter. The first was Rivian, the largest IPO since Facebook in 2012. And the second was Nubank, a leading fintech company in Brazil. We introduced stop limit trade orders in the fourth quarter and margin trading earlier this year. At SoFi Money, we introduced 2-day early paycheck, autosave, cashback, and no-fee overdraft protection. And with our launch of SoFi Checking and Savings, we now offer members 1% APY, 33 times the national average, plus no account fees or minimum balance, plus many of the free features members already enjoy. Our SoFi credit card, which includes the only rewards platform that gives points for both transactions and smart financial behaviors, really took off in its first full year. Quarterly spend, balances, and accounts grew at high double-digit rates, and we finished 2021 with 91,000 products and a debut NPS score in the mid-50s. Finishing with our tech platform, Galileo benefited throughout 2021 from growth in enabled accounts, transactions per account, and adoption of new products by existing partners, as well as the addition of diverse new partners. Fourth quarter segment revenues of $53 million was up 42% year-over-year, an acceleration versus the year-over-year growth in Q3 at 29%, and with the inclusion of a full year of Galileo results, 2021 revenue more than doubled to $195 million. Galileo added 11 million new end user accounts in the quarter, a 67% year-over-year increase to $100 million at year-end, up from 60 million enabled accounts at the start of 2021. Galileo launched in clients and signed 9 new ones in the fourth quarter, bringing total full-year adds to 44. We also grew Galileo's total B2B client base by 40% in 2021. We launched Toast last year and signed T. Rowe Price in the fourth quarter to service its future emergency savings program. And H&R Block just chose Galileo to power its new mobile banking app, Spruce. We acquired Galileo to leverage an owned and operated platform to drive rapid innovation with the benefit of a great business that further diversified our revenue. Now, as we announced last week, we're following the same playbook by acquiring Technisys, a leading cloud-native multi-product core banking platform. Adding Technisys is the next step in vertically integrating SoFi's businesses to further accelerate the pace of innovation of our best-of-breed financial products. We expect Technisys to be a growth multiplier for both SoFi and Galileo, in addition to realizing its own enormous growth opportunities, which are further strengthened in partnership with Galileo. We are well on our way to building the AWS of FinTech. Now let's talk about point number 2. The success of SoFi's unique financial services productivity loop strategy. Critical to the FSPL is creating best-of-breed products that build trust and reliability with members, which increases the likelihood they choose SoFi for a second or third product. When they do, we benefit from increased LTV per member by generating more revenue at little to no incremental customer acquisition cost. As a result, our higher LTV allows us to invest in more differentiated products and services, which in turn drives more demand and higher LTVs. It's a true competitive advantage. The FSPL has had its biggest impact yet on 2021 results. The scale of our top-of-the-funnel products is now large enough that at the same cross-buy rates, fourth quarter cross-buy volume more than tripled year-over-year to more than 380,000 products. And more than 1/3 of our new products were adopted by existing members in the quarter, contributing to the 17% decline in our customer acquisition costs in 2021. I mentioned that our total year-end members of 3.5 million exceeded our 2021 goal by 500,000. Our unique FSPL advantage not only helped us exceed this goal, we did so without notable associated marketing costs. Instead, these FSPL efficiencies allowed us to significantly exceed our member and product goals, yet still achieve our EBITDA targets. This brings me to my third key success factor for 2021. Our ability to drive a dramatic increase in SoFi's unaided brand awareness via the unmatched reach of SoFi Stadium nationally televised games, the success of our various integrated multimedia campaigns, and the variety of the influencers we partnered with. Here are a few remarkable stats. The 5 nationally televised regular season games at SoFi Stadium were seen by an average of more than 22 million households per game, resulting in a household reach of 110 million plus households in total. This visibility helped increase SoFi's unaided brand awareness by nearly 70% in 2021 to a new record in the fourth quarter. And that was before an estimated 106 million people tuned in to watch the Rams win the Super Bowl at SoFi Stadium. Before turning it over to Chris to talk through results, I wanted to share a few additional thoughts. In February, I celebrated my 4th anniversary as the CEO of SoFi. While I could not be more proud of all we've accomplished in such a short period of time, I am even more excited about what's ahead of us. We are just starting to reap the benefits from the enormous progress we have made on our strategic position, the breadth of our differentiated and diversified product suite, our tech platform that helps us serve the industry as we build the AWS of FinTech, our balance sheet of $4.7 billion in equity value, the exponential growth for our brand awareness, and of course, most importantly, our team. With that, let me turn it over to Chris for a review of the financials for the quarter and the year.
Thanks, Anthony, and good afternoon. We finished off a remarkable year by delivering record quarterly revenue and our 6th consecutive quarter of positive EBITDA. Importantly, we achieved this despite facing new and existing challenges in the quarter, proving once again that our diversified and differentiated business model drives SoFi's durability and long-term growth potential. I'm going to walk you through some key financial highlights for the quarter and year, and then share color on our financial outlook. Unless otherwise stated, I'll be referring to adjusted results for the fourth quarter of 2021 versus fourth quarter of 2020. Our GAAP consolidated income statement and all reconciliations can be found in today's earnings release and our 10-K filing. For the quarter, top-line growth accelerated as we delivered record adjusted net revenue of $280 million, up 54% year-over-year from the same prior year period, and at the high end of our guidance of $272 to $282 million. Adjusted EBITDA of $5 million was also at the high end of our guidance of $2 to $5 million. For the full year, we delivered $1.01 billion of adjusted net revenue, up 63% year-over-year. Our original 2021 plan and what we guided to during the IPO process was $980 million in adjusted net revenue. That assumed the federal student loan payment moratorium would expire on September 30th, 2021, and also included a full year of revenue recognition from our equity investment in Apex, which was called last January. Despite the $50 million plus of revenue headwinds created by those two factors alone, we still exceeded our original revenue plan by $30 million. From an adjusted EBITDA perspective, we delivered $30 million in profits, above our original full-year guidance of $27 million, and up $75 million from the $45 million of losses incurred in 2020. Now on to the segment-level performance, where growth accelerated across all three segments. In lending, fourth quarter adjusted net revenue grew 30% year-over-year to $208 million versus 21% in Q3 of 2021, driven by a 67% increase in funded volume to $3.8 billion in total, a new high for us. The largest contributors to funded volume growth were our personal loans business, which grew 168% or $1 billion year-over-year to $1.6 billion in originations for the quarter, and our student loans business, which saw more than 50% year-over-year growth to $1.5 billion. In personal loans, we captured increased demand from borrowers remodeling their homes and refinancing variable rate debt into attractive fixed rate products as interest rates increased. Additionally, we continued to improve conversion as we iterated throughout our funnel. In student loans, we benefited from increased demand from federal student loan borrowers looking to refinance prior to the anticipated January 2022 expiry of the federal student loan payment moratorium. In addition, increased net interest margins and strong gain on sale margins, inclusive of hedge gains, drove material year-over-year growth in net interest income and loan sales revenue. The lending business delivered $105 million of contribution profit at a 51% margin. Overall contribution dollars were up 23% versus the same prior year period, but margins were down from 53% in Q4 2020. The slight year-over-year decline in margins was caused by lower home loans throughput with our third-party fulfillment partner, resulting in lower home loans revenue and margins. I'm pleased to say demand remained robust throughout the quarter, and were it not for these partner issues, we would have had strong quarterly performance. These issues have since been resolved by onboarding another third-party fulfillment partner. In addition, expenses were higher in the student loan refinancing business, where we increased marketing to capitalize on elevated demand in the lead up to the January 2022 federal student loan payment moratorium expiration. When the moratorium was unexpectedly extended to May 2022 at the end of December, we lost a week of revenue from anticipated federal student loan fundings and had already spent the marketing dollars. For the full year, lending adjusted net revenue grew 42% to $764 million, and the segment delivered $400 million of contribution profit at a 52% margin. Shifting to our tech platform, where we delivered net revenue of $53 million in the quarter, up 42% from the same prior year period. Overall segment growth was driven by 67% year-over-year Galileo account growth to 100 million in total. As a reminder, it is normal to see a lag between the addition of new accounts and the engagement and monetization of those accounts. We are encouraged by this leading indicator of Galileo's growth. Q4 contribution profit was $20 million at a 38% margin, which is down year over year given the investments we have made in technology capabilities overall and the migration to the cloud, but up sequentially from 31% in Q3 2021 due to fixed cost leverage we were able to achieve in the quarter. This one quarter does not mark the beginning of a trend, and as discussed previously, we plan to operate the business in the 20 to 30% contribution margin range for the foreseeable future as we continue investing to take advantage of the opportunity ahead of us. For the full year, the Tech Platform segment grew revenue 102% to $195 million and delivered $64 million of contribution profit at a 33% margin. On to our Financial Services segment, which continues to benefit from strong growth across all products and our improved ability to monetize that growth. This segment delivered revenue of $22 million in Q4, more than 5 times the prior year quarter at $4 million, and up 74% sequentially. Within the segment, year-over-year revenue growth was particularly strong in SoFi Invest, Lantern, SoFi Credit Card, and SoFi Money. As important, our year-over-year revenue growth was twice our exceptional product growth of 2.5x, demonstrating our continued progress in monetization. Invest added 362,000 accounts and reached 1.6 million in total. Money added 276,000 accounts and reached 1.4 million in total. And Relay added 180,000 accounts and hit 930,000 in total. Contribution losses were $35 million for the quarter. While this is a slight improvement year over year, we remain in investment mode, focused on creating the right unit economics for each business to drive long-term sustainable growth. For the full year, segment revenue of $58 million was nearly 5x the $12 million we delivered in 2020, and our $135 million contribution loss was essentially flat year over year. Quickly switching to our balance sheet, which grew by approximately $600 million year over year to $9.2 billion in total, primarily as a result of growth in originations that accelerated in the back half of the year. In addition, we exited the year with $1.6 billion drawn on our warehouse facilities, less than 25% of our overall $7 billion of capacity. That low reliance on warehouse capacity allowed us to significantly reduce our cost of funds, and we ended the year very well capitalized, having raised a total of $3.6 billion of new capital. Our total book value is $4.7 billion, and our capital and leverage ratios are extremely strong. Finally, on December 6th, we redeemed all of the outstanding SoFi Technologies private and public warrants, which removed a significant source of P&L volatility for SoFi. We are excited about the strength of our balance sheet and will continue to make choices that ensure the most efficient cost and use of capital. The last thing I want to discuss is Q1 and full year 2022 guidance. It's important to note before getting into the details that the incremental net interest income from SoFi Bank will only contribute nominally to Q1 results and prior to fully originating loans in the bank, which we expect in May of 2022. That's because when we opened the bank in February, we did not contribute any existing SoFi loans to the bank as we initially capitalized the bank with cash. We are still transitioning our operations to have loan originations occur from the bank, and that transition will not be fully complete until the end of May. Over the last several quarters, our unique, diversified business model has proven to be an increasingly powerful competitive advantage. Even as we continue to invest in scale, we expect that strength and momentum to continue. Our Q1 guidance incorporates the negative impact of the unexpected extension of the federal student loan payment moratorium to May of 2022. We estimate that negative impact to be approximately $30 to $35 million of revenue and $20 to $25 million of contribution profit in Q1, with loan origination levels for the entire quarter to be consistent with those of the first 3 quarters of 2021. For Q1, we expect $280 to $285 million of adjusted net revenue, up 30 to 32% year over year, and $0 to $5 million of adjusted EBITDA. Had the moratorium expired in January, we estimate that Q1 revenue would have been $310 to $320 million, and EBITDA would have been $20 to $30 million. For illustrative purposes, we've included this alternative scenario in our investor presentation. For the full year 2022, we expect to grow adjusted net revenue 55% year over year to $1.57 billion and deliver adjusted EBITDA of $180 million. There are several recent developments that factor into our full-year guidance. First, we assume the moratorium on federal student loan payments expires as currently contemplated on May 1st, 2022, and student loan refinancing origination volume will normalize at pre-COVID levels partway through Q2 and remain at those levels from that point through the remainder of the year. Second, we assume the SoFi Bank will begin contributing to SoFi's results more meaningfully in Q2 rather than in Q1 when we open the bank. That's because, as I just mentioned, we opened the bank with no loans and initially capitalized it with cash from our balance sheet. This is an important distinction because we won't begin to realize the lower cost of capital benefits of the bank until we can originate and fund loans in the bank. And we believe it will take until Q2 to build the appropriate loan balances to see more than a nominal impact. Third, we assume that Technisys revenue growth will be 20 to 25% for the full year and start contributing to our business following the close of the transaction. And fourth, as discussed previously, we expect our core SoFi business, excluding the impact of Technisys, to deliver incremental EBITDA margins of 30% in 2022 as we continue investing to drive sustainable growth for years to come. Technisys will contribute a small amount of EBITDA in 2022, but as we mentioned last week, 2021 was a year of significant investment for Technisys. Over time, we expect this business to be additive to consolidated incremental EBITDA margins. The last thing to cover on guidance is our stock-based compensation expense, which we currently forecast to be between $80 and $85 million in Q1 and $340 million for the full year. In summary, we could not be more proud of the results SoFi delivered in 2021. We exceeded $1 billion in annual revenue and delivered a full year of positive EBITDA. We continue to be extremely well capitalized and are excited about the opportunities in front of us. We look forward to another strong year in 2022. With that, let's open it up to questions.
Thank you. We will now begin the Q&A session. If you'd like to ask a question, please press star 1 on your telephone keypad. And if you'd like to remove that question, press star 2. As a reminder, if you're using a speakerphone, please remember to pick up your handset. Please limit your questions to one question and one follow-up so we can accommodate as many participants as possible. You are welcome to rejoin the queue by pressing star 1. We will now take our first question from the line of John Hecht of Jefferies. John, your line is connected. Please proceed.
Thanks very much. A nice quarter, guys, and thanks for the detailed guidance. Very good member and product numbers for the fourth quarter. Maybe can you give us color on what drove that in terms of customer acquisition channels, customer acquisition costs, any change there, and where you're seeing opportunities and so forth?
Thank you, John. So it was an extraordinary quarter for member and product growth, and it's the culmination of a lot of hard work that's gone into the company over the last 4 years. Everything from the member home feed in the app to developing use of data to make recommendations to our members based on their information and other members' information in a personalized way, a referral program, a rewards program, and then, of course, just differentiating the products individually themselves. And then layered on top of all that is just the hard drive that we've made to increase unaided brand awareness. As a financial services companies, our members need to trust us. We need to become a household brand name, and the ability to leverage the broad reach that we talked about in our prepared remarks of SoFi Stadium throughout October, November, December really gave us a nice lift in unaided brand awareness, which makes all of our marketing more efficient. The combination of that and the product differentiation that we've added as it relates to products like SoFi Money and SoFi Invest, which I talked through in the quarter, really drove a really strong growth rate across both members and products. And importantly, at a decreasing customer acquisition cost. I'll let Chris talk to the specifics on the decline in customer acquisition costs on a per member and per product basis. But it was really the culmination of product, marketing, operations, and just a really strong integrated campaign across traditional media, digital, and social influencers.
Yeah, thanks, John. So if you look at Q4 2021 total sales and marketing divided by new members, you'll see that our overall sales and marketing per new member was down nearly 20% sequentially. And if you look at this on a full year basis, it was down about 18% when comparing it to full year 2020.
Okay, that's great. Thanks for that color. And then second question, and I know, Chris, you talked about the contribution